Hi, everybody. This is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Hey, good day, traders. This is Dennis Wilborn. I want to welcome you to the Art and Science of Active Trend Trading. This is an update we do once a week. Just to let you know what's going on in the market. Remember, all the materials that we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. A little bit about our company's motto: clarify, simplify, and multiply. I learned how to trade when I was working 12 to 15 hours a day, about 6 to 7 days a week. And I promised that when I started trading for a living, I would come up with a system that could be easily learned to help the folks who are still working for a living transition and be able to trade a simple, straightforward, a clear and simple system to help them multiply their assets. Remember, most trading errors come from a lack of patience and compulsion to do something even when nothing really needs to be done. This is one of the major issues and major reasons why traders basically let trades go huge against them, and they lose, sometimes blow up account, simply because they're not trading a rules-based mechanical system like the active trend trading system is. What we do in this session is we basically go track the index, see what's going on with that. Got some potential bonus setups, setting up with Baidu. It's going to all depend on what's going on with the Chinese tariffs. And so the other events that's driving the market right now is stop with the tweets already. So let's get in. Hey, I want to take a look at a couple of charts because the market just kind of, the last couple of days just kind of went ugh. So here we go. I want to start with just take a real quick look at the spiders as a reflection of the S&P. Excuse me. And what I've left in here is I left my Fibonacci, and we'll start unloading the Fibonacci's. But I want to take a look at a couple of items first before we get jumping into this. On a weekly chart, what do we have? We finished off last with the hanging man, which is a bearish reversal signal. President Trump comes out and starts tweeting about hammering the Chinese with tariffs if they don't, get their act together and come to the table and negotiate properly. Bam, knocks the legs out from underneath the market, at least temporarily. Or is it just time for a stronger correction after this huge run-up that started the day after Christmas in 2018. What I've highlighted here, and I have basically drawn into the system here, is this big blue line. I'll make that a little bit thicker so you'll be able to see it. There we go. That thick blue line, that basically reflects a 10% drop from the high that we saw last week. That would be a nice, healthy pullback that could then potentially start building a foundation for the next leg higher. That's assuming the economy is going to stay strong and all kind of stuff. Where would that put prices on the S&P? Well, it put prices on the S&P right down at approximately the 50% retracement on the Fibonacci's. So that's a couple of things to keep an eye on. I drew the Fibonacci's from the weekly low, the week of 12/24, up to the weekly high on the week of 4/29/19, and then that retracement down to about the 50 takes us down, and that would be about a 10% drawdown. It's just a few dollars short. It's the low here is about 264.91, 265 area. And the 50% retracement is at 264.36. So keep an eye on those areas. Now, is it going to drop straight down to that area? No, of course it's not. It's basically going to zigzag and move down. But one of the things to keep in mind when we are in a downtrend, things tend to fall, and I don't know if it's due to gravity or what, tend to fall faster than they go up. And they'll fall in larger amounts. And so the magnitude of these weekly falls that we see from last year is pretty significant. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks to get down to the ultimate low here. And so if we could stretch out something similar along the same type of trajectory, we would say, okay, here's where we'd approximate the price going up, or price hitting if it was on a carrying symmetry forward. And one of the ways we can do that, if you're just interested in it, is we can just basically trace a time chart from, there we go, I think it's from here, about here, to about, oops, we don't want to do that one, about here. And this is a time ratio, simple little time ratio, over to here. And a 200, and we'd have to roll that over a little bit more, but it would show us getting down to that level about over here. Another thing we can do on that is just take that away and just draw a little straight line from this high here, when it started its downtrend, to this low here, and then just move that across to this past high over here, activate it, and that's the way it's even easier. And where would a 13-week period take us? Well, it'd take us out to about, once again, assuming we're going to retrace all the way back out there, to retrace all the way to about 100% at the same trajectory of retracement, that would put us down to the lows at around 8,519. Now, if we were tracing along that, we can anticipate potentially getting down to the 50% retracement when? Well, right there about 6/17, middle of June. And so oftentimes what happens, middle of June time frame, going into June, July, so summer doldrums, into August, and August gives us typically a pickup going into September and then on to the end of the year. So somewhere in that range, but it gives you a picture of what could happen. Let's get rid of these drawings for the time being now and go on over and take a look at what we can see on the, get rid of fib, and I'll get rid of that there. And so let's take a look on the Qs representing the NASDAQ. Again, we want to take a look at what's going on over here with the, and I drew a couple of lines on here, trend lines. As you can see, if we go back to the low the week after the ultimate low and draw a line up, as you can see, on a daily basis, we dropped that trend line, flirted with it on Thursday of last week, broke it on Monday this week, bounced back up, and now we've closed back below it. So that trend line now is busted. What oftentimes happens after a busted trend line is you'll see a pullback back up towards the trend line to what we refer to as kissing the trend line goodbye before taking another dive down to the downside. Will that happen in this particular case? We don't know. We just got to basically monitor. One of the other things we can take a look at is what's different on this particular swing up or this particular swing down compared to some of these other ones. Well, as you can see here, on the way up the ladder, as you see, on the way up the ladder, once we got above the 8-day moving average, we dropped below it once, but then we basically respected the 20-day moving average, moving all the way up until we hit this one little speck at the beginning of March. Then it popped up from there, still respect to the 20, respect to 20, respect to 20, pow, doesn't respect the 20. The 8-day now has been, we've closed below it, we've swung back down, and now we've retested at the 34. Will the 34 hold? Again, at this point, we don't know. But a couple of things are interesting is that we kept hammering our head up here about just above about the 192 level, or just above 190. And finally, we basically dropped down below it. TSI swings down. TSI on a daily chart is pointing down. TSI on a weekly chart is also crossing over to the top side. What tends to happen when we see that kind of action? Well, you get into it. Normally you get into a little bit more severe of a correction and a deeper pullback. And so we'll see if that in fact does happen. Again, we can throw on a fib on this particular chart. If we do that, what's the fib telling us? Let's get rid of that drawing. Just a fib from that low to that high right there. And so as we see, a 50% retracement will take us back to 168. What type of, how much is that on a pullback? Again, go here, go down the middle, and what does it come out to be? It is about 12% to the downside. And that would be a nice, healthy shake out the weekends type of a pullback that would give us a potential opportunity to jump back in to a trade on the Qs moving forward. What about our buddy IWM representing the Russell? A little bit more, if I was not mistaken. Okay. What I'm looking here on a weekly chart or a daily chart, let me go back and check one thing, guys. Hold on just a second. Because I think, yes. As you can see, the spiders dropped to the 34, basically held back above it, but actually almost got down to the 50. And so that's, it's starting to hammer those moving averages down, therefore setting up a slippery slope in the future. Is it going to happen tomorrow? We don't know, but we know that if that kind of price action continues, it will eventually hammer down those moving averages and it will slide off to the downside. What are we seeing on the Russell? The Russell has basically, it's still respecting this little uptrend line at the 34. That breaks, then again, this uptrend here is a lot shallower than the other markets. And we never even got close to coming up here and hitting the highs from last year. And so roll over here and drop. If we see over the next few days it breaking back down below the 50 and also closing below the 50, watch for the pullback up into the 820 for potential trades. Because if this is a topping action, what we'll see is an action similar to this. We will pull down. Let's say we drop to the 50 or just below the 50. And if it will try to rally. And it's this next move up that is telltale. Do we rally and break out and move on higher? Or do we fall, just come up to this level about 160 or even a little bit short of 160, stall there and fail? That's an indication that we are going into a more significant pullback and or downtrend. You saw something like that over here. We went up, hit a new high, pulled back to the 8, pulled up, basically tried to rally back up to the high, failed, dropped. And I think that what we want to keep our eye on with IWM is it will be more susceptible to those failures than the other entities that we're looking at. So let's go on and just finish the slides, and then we'll jump over to a couple of other. So tech tip is wait for the extremes and on indicators, wait for extensions away from the 20-day moving average on price action. Here's where we're sitting. May tends to be a little bit of a sideways mark for the NASDAQ and all the other entities. We may be seeing that as we speak right now. Oil, crude oil. If the world economy is slowing, we would anticipate oil to roll back over. Of all the entities that we follow on a seasonality basis, oil is kind of keeping its is following its seasonality better than the other ones. Gold, the indexes themselves are kind of out there charting their own course, not following specifically the seasonality that we expect. If crude continues to follow this seasonality, let's say we get through the Chinese tariff issue, we could see a rally in crude going into the end of the year to drive it on up to just past the September into the October timeframe. Lastly, hey, just a reminder, on the web page that I post the Art and Science of Active Trend Trading, I also post provide access to 3 very specific watch lists. One of them is, I call it the Lucky 13 watch list. Basically, it's a composite list of all the stocks that have shown up on all 13 of the IBD premium list. I roll those all together. I see which ones appear on more list. And then I spit out a new list that shows, okay, these are the stocks, the top 16 stocks that were on multiple lists. So ViiV showing up on 7, Palo Alto Networks 6, Paycom 6, you can see Cyber 5, and it goes on down. The idea behind this, if you're going to go and search for a stock to trade during the week, hey, go and look in one of these. They tend to, are being followed by more institutions, and basically, again, showing up on more of the list. Therefore, the thought behind that is the probability of them, these stocks doing better than the other stocks is worth following. Lastly, hey, keep your eye, tweets galore. We'll see what what happens with that. Then I'm looking at Roku for earnings tomorrow. The FANG stocks, we want to keep an eye on the FANG stocks if the market goes into corrections. They are still some of our most powerful members of the indexes. And so the FANG stocks, which are, of course, Facebook, Apple, Amazon. N is for Netflix, and G is for Alphabet, although it's actually for Google. And then Baidu has earnings starting next week. If we get some kind of resolution by this Friday on Baidu or on the Chinese trade talks, we could see a nice rally in both Baidu and Baba and some of the other Chinese stocks. How are we doing so far in 2018? Strategy 1, we're up nicely. Strategy 2 is one place where we've really been focusing on developing our strategic compounding, so that we can show folks how to grow a small account into a large account. And then strategy 3, we'll just continue to go looking for basically on strategy 3 by the end of the year. Looking at to be up somewhere between 40 to 70% in that entity by the end of the year. So the idea behind strategy 2 that we're establishing and helping folks out with is basically it is a options trading strategy, but it's the power of strategic compounding. Did you know if you take $10,000, our target is to do 5% per week. That's our compounding period. What makes it possible to do 5% per week? Is that weekly options that can be traded very, very quickly, doing spreads and this type of thing. We have a very set way that we're following up to grow this 10,000. But the thing that I want to share with everybody is look at how it rolls. Okay, you have 13 compounding periods per quarter, and at the end of the first quarter. You know, if we hit on average 5% per week, it would be up 88%. By the end of the second quarter, we'd be up 35, over 250%, or our 10,000 would have grown to 35,000. And then at the end of 39 weeks, that's at the end of quarter 3, we'd be there. Now, we got started a little bit late this year in doing this because we had originally put out the strategy to grow at $500 to $1,000 per week. It was a cash flow strategy. And I said, well, why don't we focus a little bit more on developing, on compounding? And look what happens at the end of, 4 quarters if we hit 5% per week. And that's where it hit me. Many people out there have either, have never, developed their own nest egg, or maybe they lost their nest egg in the debacle of 2007, 2008. Here's a mechanism by which you can start growing your nest egg again. Nest egg, not nest egg. Nest egg again. That is, and it can happen very, very quickly. Therefore, regardless of how old we are, we can still grow back that nest egg that we maybe think we're missing. And let me tell you, if you are able to start generating, that kind of amount on a weekly basis, you get your account up to $100,000 or something like that. That's going to change our lifestyle. I mean, it will change our lifestyles. Here's how we're doing so far. Again, as I said, we got started a little bit late, but as we rolled over into the new quarter, we rolled over $12,728. So that was up almost 28%. I had a little bit of a down week last week, but we're still up over 70% for the year so far. So our target for this week is $850.38. And we, like I said, we've set up a specific mechanism by how we try to do that. If you want to find out more, or just kind of, join in all 3 of the strategies, because they're all offered for the same low price. I as a video discount, trade a winning system starting today, you save 40%. Our regular monthly membership is $124.99. You can get it for $74.99, and that will stay good as long as you're a member. Or you can save $175 for a quarter if you join for the quarterly membership of $199. All you do is go to this website. The password to have access to this special pricing is SAVE, and that's SAVE, all caps. So as always, trade wisely, trade profitably. Mahalo. God bless everybody. Let's take a quick look at 2 different stocks I'm looking at for going into the end of the week. Okay, first, Roku. Now, I'm not going to... Roku has continued to move up. It's in a nice little move. You have to keep an eye on Roku, because from the low down here at 55 to the high up here is about 25%. So these are the kind of stocks that we want to be. These are the kind of stocks that we want to be trading. That run, 15, 20, 25% over a short period of time. Roku is one of those stocks that is interesting. What's another one that's kind of interesting to us right now? Baidu. Baidu has just been. It is basically back at long-time support. Is it going to bounce into earnings? I don't know. Right now, it's in a downtrend, but it's testing, it's basing. Is it going to, if by chance we do get a positive resolution to the Chinese trade deals, we could see Baidu rocketing out of 160 all the way up to 185. How far is that? Well, let's take a real quick look. That is about from here up to, let's say, 185, about 14 to 15%, but about $24. Again, that fits the criteria for what we're looking for in particular stocks. And then, so Baidu, Baba, another one. Baba, a little bit better shape. It has earnings on the 15th after market closes, and Baidu has earnings. We'll be doing our special earnings trades on both of these, and Baidu has its earnings on the I want to say the 17th. Yeah, the 16th, after market closes. The other stocks of interest, of course, is just keep your eye on the FANGs. That's Facebook. Wait for the setups. And right now, I would, right now, and what we were talking about earlier is, looking at things that are extended with indicators at extremes. That's exactly what we have with Facebook. The indicators, both the long-time momentum on the market forecast and the weekly TSI, both above the positive 42 level, which is our level of showing that price is overbought. And throw the additional aspect in this is look how far we are extended, prices are extended away from the 20-week moving average. The 20-week moving average is here. Now, not as far extended away from the 20-day moving average, but what do we have going on right here? We have the TSI rolling over, market forecast, longer-term momentum rolling over, and whenever that has happened in the past, we've gotten where we have pulled back down to a longer-term level of support. So I like the support on Facebook at about 180. Longer term, we're going to be looking at probably this level about 170 for other support there. Let's get rid of our drawings. And then the others, I like Amazon. Well, we're going to wait again. It's doing a nice little V bottom. It's back up towards the highs. Looks like it's ready to roll over and fall. How far is it going to fall? It could get a nice correction back to the 1833 level, 1845 level, all the way down here to the 50-day moving average at 1811. Google, similar type situation. Google actually crapped out after earnings, fell. If we drop this level on, this low from earnings, Google could see some significant downside because we could look at this as being a flag level where it would go from here to here, measure this level from 1297 down to 1158. Whatever that difference is, extend that down from 1158. That'll give you a lower downside target on Google. I think Google's going to be having a lot of scrutiny along with Facebook about how they are dealing with their selectivity on what they're posting and this type of stuff, and how they're potentially eavesdropping on their clients and customers. I think that's going to be coming out, and it may, kind of shake them up and blow them out of the water. The other one I like, of course, is Netflix. Netflix is just hanging in there, hanging in there, hanging in there. It's driving sideways, support down here at, let's say 342. And a resistance up here at where? About 387. So that basically concludes all I wanted to show you for this week. Have a absolutely great rest of the week. And again, join me on Friday for how to make money trading stocks, options, and ETFs, where we'll have a really quick little session on what the market's providing to us going into Friday. With that, I bid you adieu again. As always, trade wisely, profitably. Mahalo. God bless everybody.